we were instrumental in bringing a lot of foreign capital through various development financial institutions to Sri Lanka. But more importantly, what we are doing is we are supporting our corporates to become global companies as much as possible. We have grown the unit trust business in Sri Lanka significantly. We want to expand it further. So, given where we were around this time last year, or probably mid last year, so there was a lot of uncertainty in the system. I think all of us can't deny the fact that we have made a decent recovery. Interest rates are moderating. Inflation has been brought down to a single digit, in fact, a low single digit as of the latest statistics. So I think the serious spiraling pressures that we were witnessing around last year, 12 months ago, has been addressed to a great extent. So probably we should give credit to the people who deserve that, including the business community. Everyone took this as a real challenge, and everyone had to go through very difficult circumstances. But of course, I don't think we are out of the woods completely as yet. A lot of things need to be done. But what is more important is use this as a base to do all the corrections that we want to do, particularly the reforms. Because still, I think on the government sector, probably we are not really sure whether we can sustain those budget deficits. So probably we need to rationalize our expenditure, do those reforms, because the public sector is still a burden, in my view, compared to the cost that it takes on the Sri Lankan economy. And some reform initiatives have already happened, started, but I think it's important that we go the distance, because as everyone knows, previously we've gone to so many IMF programs but had to stop it halfway, and we haven't achieved the desired outcomes. So it's important that we learn from the mistakes and use this as a platform to make those required corrections and set the country on the right growth path. So I think next year what we're looking at is about 3 to 4% growth in terms of the GDP. But I think as a country, for us to prosper, it is important that we push that number to 7-8% at least, if it is not double digit. So probably might not happen next year, because we need to come out of this crisis still. Probably our credit rating has to improve more to get the required investments to drive that growth. So I think in the long run, when I say long run, probably for the next 3 to 5 years, we should look at that 7% plus growth. Ideally touching that double digit number, which is difficult. But let's say 7 to 8% growth at least for the next 4 to 5 years should take us, should recover some of the damage that happened over the last couple of years in particular. So if you take capital markets, Sri Lanka has, I would say, quite thin capital markets, because it's largely a equity and fixed income driven capital market here. Just to talk from some statistics, market cap to GDP is still less than 20%. And even fixed income, it's largely a bank deposit centric investment environment. So how I see is the capital market has taken the brunt of what happened in the last couple of years, but with the interest rates reducing again, and we'll see more opportunities for equity raising, not only equity raising, even for debt raisings as well. Because one problem that we encountered was the cost of capital was so high. Government treasury yields were going around 25 to 30%. And which means the cost of capital for a normal corporate was very high. And at that rates, nothing much happened in terms of the new projects, new investments. So it is important that cost of capital is brought down. I think interest rate has come down to a large effect, but probably there's scope for more reduction. And when that happens, the companies will be more confident about making new investments, and that will lead to a lot of capital market activities. As far as we are concerned, we are engaged in capital raising for corporates, doing initial public offerings, debt raisings through debentures, mergers and acquisitions. All that came to, I won't call it a standstill, but significant reduction over the last couple of years. But we see that appetite coming back. The cost of capital is more affordable, and companies are seeking those fundraising opportunities, particularly to invest in new projects. And we see, therefore, that should lead to a capital market revival, and which will be good for the country, because you need to form more capital. Add to that point, I think Sri Lanka is a situation as a country. I think we are over leveraged country in my view. Of course, everyone knew that our debt ratios were too high. That doesn't stop at the government level. I think it permeates to the company levels, probably even to individual levels as well. Everyone's leverage is too high. So to reduce the leverage, it's important that you have to invest in equities. You need to invest in equity linked instruments. So that requires new investments. Some may come from Sri Lankan capital markets. I think more importantly, we need to attract that from outside as well. So that capital formation should lead to, in my view, an exponential growth in capital market activities, or at least it should happen for the country to get to that growth number. So if you take our business, our group's business, we do both business to business as well as retail B2C businesses. Starting on our investment banking business, which is largely a corporate business. So we do raise capital for corporates. So what we have done, even in the difficult times, we have completed some IPO transactions, raising capital and debt transactions. We were instrumental in bringing a lot of foreign capital through various development financial institutions to Sri Lanka, where the dollars were such a scarce commodity. But more importantly, what we are doing is we are supporting our corporates to become global companies as much as possible. So, other than raising money for Sri Lankan operations, we have recently raised money for Sri Lankan companies to expand overseas. We have done a fundraising in Africa for a large apparel company. So, as we speak, we are trying to conclude a couple of fundraisings in Maldives, Africa, for some of the Sri Lankan companies to expand overseas. Because I think as a country, we should diversify our operations and increase our dollar inflow, because we all knew when the dollar inflow is not sufficient as a country, how much of a difficulty we could go through. So we need to sort out one of the deficits, the balance of payment deficit problem as well. So we are increasingly focusing on increasing our foreign revenue as well by doing transactions outside Sri Lanka, and also helping those Sri Lankan corporates who want to go outside in particular to set up those operations, raise the requisite financing, and help them to become regional, if not global, players in that respect. So that is largely our investment banking operations. Similarly, if you take private equity or on balance sheet investments, so as I said earlier, we think Sri Lanka is a over leveraged scenario right now. Most of the businesses, so those businesses will require a lot of new investments, equity investments. So I'm looking at those companies, opportunities who could grow to the next level, who will require that capital. It could be in the form of private equity, it could be in the form of venture capital. So we're identifying those new companies who can take us to the next level, who can take the country to a regional or global level. And similarly, there could be high growth areas, it could be tech enabled businesses. As an industry, it's growing globally, and we are backing some of those investments as well. That's through our investment businesses. Coming to our retail business, which is largely a stockbroking and wealth management business. In fact, we have grown quite tremendously, quite rapidly over the last couple of years. So as we speak, again, we have about 230 billion assets under management, both retail and corporate in our wealth management business. So what we want to do is to give more investment choices for our investors. Because as I said earlier, it's largely bank deposit based and maybe a little bit of stock market based investment options our investors have today. But we have grown the unit trust business in Sri Lanka significantly. We want to expand it further. For example, go into alternative investments, provide our investors the choice of doing not only the traditional investments, but maybe mutual funds, the balance funds, and even alternative investments. It could be in private equity, venture capital, could be real estate. So we are forming a lot of partnerships to provide these solutions to our investors, and also making it a more convenient process for them. After all, what we want to do, help the corporates to grow and make retail investors more wealthy. So that's our game. That's why we are here for. Sri Lankan stock market is probably only about 20% of GDP. So that number has to grow significantly if we want to make strides in this area, which means there has to be more listings to come, new listings, new companies has to be listed. So that is one of our cooperations. On the investment side, it's predominantly dominated by bank deposits, which is I think about 15 to 20 trillion rupees. But unit trust, for example, is only 1% of that. So in terms of the exposure of investors to multiple investment opportunities is quite limited. So we want to broad base that. One thing we are trying to do is to establish more overseas links, overseas partnerships, because it will help the Sri Lankan corporates in multiple ways. We were helping Sri Lankan companies to expand outside, which will require new capital to be raised, new partnerships to be formed. So through our various partnerships, so far we've established some partnerships in countries like India, UK, Japan. We have operation in Bangladesh. So with that, we are taking our companies outside, helping them to raise the required capital. Locally, we want to expand our operations, which is largely a Western province dominated business so far for us. We want to make it regional with the support of our parent company, NDB Bank, as well, which is having an island wide footprint. So that is our immediate strategy in terms of broadening our operations, looking outside Sri Lanka as well as within Sri Lanka to go regional as much as possible so that we can increase our offerings to our clientele. So today we are largely a Sri Lankan operation, although we do have some revenue coming from outside. So we want that mix to significantly change over the next 3 to 5 years. Our aspiration is at least to make it half the revenue coming outside Sri Lanka, so which is in line with probably what the country's trajectory should be as well, improving your exports, generating a positive balance of payment for the country. So that's a overarching vision. But how do we do that? We can't do that alone. We need to form partnerships. We need to be collaborating with other investors and other institutions outside, which we have already taken a lot of steps towards that. So how we can address this is how we can help our corporates, clients in benefiting from this is, so we would like them to set up operations and diversify their revenue base, look for growth opportunities even outside Sri Lanka, and we will be able to help them. On a domestic front, I think our capital market business is fairly nascent. Investor education has to improve, and being leading capital market players, I think it's very important to bring new products into the market, introduce more options. It could be derivatives. So recently, CSE is introducing short selling. We will be partnering with them, trying to bring new products so that multiple choices will be available for investors as far as investments are concerned, and improving the overall education, providing that large choice. So invariably, not look at only asset management, but playing a role in your wealth management, even things like succession planning, because large businesses that could be a problem. Succession planning and trust services. So providing that whole gamut of capital market services where larger investment houses in the world, like maybe the BlackRocks or the Blackstones, that kind of institutions will offer. So our aspiration is may not be to that scale, but in terms of the choice and service offerings to get there as much as possible so that our clients and investors can benefit from it. I think a debt restructuring was necessary. I don't think we could have had a way forward without a debt restructuring. And taxes, I think what I would like to see more is widening the tax net rather than just going after the same set of people who are paying taxes, including individuals. Because at the moment, one of the biggest challenges for us and probably the country as well is the brain drain, the loss of human capital. So we need to stop that. I won't say that we don't need to increase taxes. We need to have taxes, but make sure it's a fair play so that the tax net is as widened as possible, and also probably would like to see better use of those tax money as well. So that's, I think, the wish of every citizen in this country. But I think we need to take specific measures to address this brain drain issue, because we can't let the social fabric to unravel, particularly with professions like doctors, as we all know, right? And those will be the essential ingredients of our lives as well. So that will be a basic expectation if you are a citizen in this country to have a decent medical service. So I think we cannot let that fabric to unravel.